my pro way to trade long-term consolidation. With this approach, you don't need to get chopped up by action, whether it's a stock or anything else that's moving in a sideways range. I've been using this approach for 26 plus years, and I'm going to look at price action, market timing, and momentum as I do it because I'm HEMA ready, and that's how we roll here. So, important reminder that trading and investing can be extremely risky business. Therefore, it's your responsibility to evaluate any information, opinion, advice, or other content contained in this video. Now, for this demonstration, I'm using Apple because they happen to be reporting earnings in a few hours, so it's already kind of in the focus, but this can be for any stock, Forex, crypto, futures market that you trade. So the first thing you need to know is that I'm going to demonstrate this as if it's unfolding real time, okay? Because it's way easy to go back and look at a past long-term sideways range and say, do this, do that. But what does it feel like in the moment? So the best way to do that is to scroll back and unravel as it's unfolding. So here, first, you need to have had a trend in either direction, up or down. And you can see here that Apple was in an uptrend, higher highs and higher lows. All right, now it made a new high up in this 280 range as of the current pricing. It went sideways for a little bit. And I'm not talking about a little few weeks of action like this. Okay, long-term range means actually happening over weeks or months. And you can see that went up again. Awesome. And so right now, if you were trading this, you'd be like, all right, cool. Apple's in an uptrend, right? Everything's hunky-dory. But then it started to weaken further and it went below a key low. Now, in this sense here, you may think, all right, we're turning into a downtrend. And yes, in the short term, that happened. If you look at momentum, like my RSI power zones, my favorite momentum indicator, you can see how there was a push down lower into the more bearish territory. But here's the thing. When the bears finally tested this low that had been maintaining the long-term uptrend at one of the stair-step levels, okay? So to be clear, the trend was broken and turned to down at this line, which I'm changing to pink. So then the next support became here, okay? You can see that the first day that it got to it, it traded below, but it didn't close below that level. So that's your first clue that a consolidation range might start to unfold. What happened next was that there was another day of action. It was a small range. And you can see, again, it didn't close below the level that had violated. So how I like to label this is making it a dash line. So I use pink for support and blue for resistance. This way, the pink dash line means, hey, this was a support, but it's been messed around with, but it's still kind of holding as support, right? Bears aren't able to push below it. Bulls are like the little piggies inside the house and the wolf is trying to blow the house down. And the bulls are inside and they're like, no, you're not blowing our house down. So once that unfolds, it's interesting, there was a rebound. And at the earliest stages, this is when this started to become a long-term consolidation range. Now, you again wouldn't know that real time. You have to follow the action. So how do we know that a trend is turning into a sideways range? Is it fails to make new highs or new lows. So in this case, we need to see movement back above this December 3rd high, right, for the uptrend to resume. But that didn't happen. It came up back to this 280 range and then started doing all this business. So at this point, okay, I would say as of this first really sharp down candle, this is when if you were trading Apple at this time, or again, if you're seeing this on any market, this is when you got to start putting that hat on that says maybe we're turning into a long-term sideways range. But you don't have to guess. You just have to kind of put the borders on it and see if the market action follows. So the next thing you want to do is identify the resistance. So I would go to the extreme level and to the level that I'm suspecting is turning this into consolidation. So that is this lower high in this case. So I just connected those two levels and look how in this particular chart, naturally, a couple days later, it reinforced that falling blue resistance line, okay? So I'm going to fast forward a bit here because you can see that the market approached this January 20th range, which had tested this October 10th range, right? And then here on March 20th, came close, didn't even touch the levels, made a little multi-bottom, and then started recovering again. And now, as of this very moment, we are back up near the falling resistance trend line. And the share price is churning, coiling, dancing around this blue line. So just like I did with the pink line, what do you think I'm going to do with the blue line? That's right, we're going to make it dashed, but we're still going to keep it on the chart because we can see that bulls, okay? So now it's flipped in the little piggy house. Bears are inside, holding up the door against the bullish wolf, right? And bulls are trying to pick this thing up and blow through consolidation, but the bearish pressure is still hanging out. It's not allowing a complete breakout. All right, so at this point, you have mapped all the consolidation. Here is my really pro tip for the actual action you might want to take. Again, this is not a trade recommendation on this current chart. This is an example of how to navigate these situations. What I like to look for is 2 daily chart closes in a row that are green candles and maintain above the falling trend line resistance. So you'll see we've had iterations, but we never quite had that, right? We had this green candle on April 22nd close above, and then this April 23rd candle, but it was a red body. Next day after that, still closed above the blue line, but it was a red body. We now today have April 30th closing back above the line, but what I'd like to see is that the May 1st candle closes above. Now, because we are on the verge of earnings, keep in mind that could be a propellant to like a gap or something. But even if you're finding this type of chart pattern and there's no earnings around the corner, that's still the type of price action you'd want to look for. Now, the other thing to keep in mind is while that is my pro way of looking at, all right, I have confidence that this is actually over, right? And a trend is resuming, you got to be careful where you put your stop. You have choices. If you put a protective stop way down below the consolidation support, in this case, that's technically correct, but that could be a lot of money on the line. So it depends on your account size, your risk reward. That's technically correct, but it's kind of large. What I prefer to do is if we get a breakout, okay? So I don't have a crystal ball, but if in this case, Apple were to break out and have those 2 days of closes above the falling blue line, then I would look at the latest move higher in the consolidation, and I would look at the platform of support. And what I can see here is that that's somewhere around this low in this 265 area, okay? 265 or lower would be a reasonable place to put a protective stop. If the breakout upside is unfolding, it would not be a stop that would protect me if consolidation resumes. However, it would limit my loss before this turns back into a big sideways churn of consolidation, all right? So I hope you found value in this video. You now know how to be ready when consolidation is unfolding, how to map it, and how to know when it might resume and manage the trade. Go ahead and hit that like button and subscribe to my channel so you can get these notifications when videos are ready as soon as they release, and I'll see you in the next one. You can sign up for the link to get my hot, timely, actionable updates as soon as I publish right to your inbox.